The business of Bitcoin mining has exploded over the past year in tandem with the huge growth of the blockchain industry. During the Bitcoin boom of late 2017, mining profitability was through the roof. As the price of Bitcoin fell and then stabilized around $8,000, mining profitability fell with it, leading miners around the world to have to think critically about how their operations would stay profitable. Recently, finance magnates spoke to John Kingdon, managing director of the third Bladetec Bitcoin mine, about the mine's unique ownership model and the evolving role of Bitcoin in the world economy. Okay, well, John, thank you for joining us. Can you tell us just what is the third Bladetec Bitcoin mine company?
Well, the third Bladetec Bitcoin mine is going to be the largest Bitcoin mine in the UK. It is the first mine of its kind to be offered to qualified investors. It's 100% shareholder owned, and its sole purpose is to mine Bitcoin. It's actually been modeled on a forestry fund where one of the directors, Declan Kennedy, won the Entrepreneur of the Year in 1996, maybe 97, for the idea of a collective cooperative ownership of assets.
Mm-hmm.
And what that was it would raise money, and with the money it would buy land, plant trees, grow the trees over 30 years, so it would hire a guy named Bob to look up trees and things. And after 30 years, mature growth timber would be cut down, sold on the market, and that returns cash. And then the land would be sold as well, which would return cash. At that point, the company would be shut down in an orderly way, and all the proceeds sent out to the shareholders. We're doing exactly the same thing for Bitcoin. We're raising money. With that money, we buy miners and electricity, and a little bit of administration. We did place it somewhere and all of that. Instead of trees, it's Bitcoin, and instead of 30 years return, it's a 2-year return. And so within 2 years, we will take the mining assets, the miners, and all of that. We will sell those. That returns money, and then we will take the Bitcoin, sell that. That returns money. We will orderly shut down the company in an orderly way, and all of the proceeds will go to the investors. So that's the idea.
Okay, so what does it take to be a qualified investor for Bladetec?
Well, qualified investors is a UK term. It's high net worth, it's sophisticated investors, as well as institutional or family officers. It is the company, the third Bladetec Bitcoin mine, is a standard UK company limited by shares, and the shares are priced in sterling, so it is a sterling investment in and sterling rewards paid out. Bitcoin, cryptocurrency, drives the value, but the actual investment is in sterling. And so it's open to any investor that is a qualified investor in the UK. They don't have to be British. They can be from pretty much any country. We're raising the funds via an FCA registered and approved entity, which means that KYC and AML checks are done on the prior to cleared funds coming in, and it means that our investment sort of inherits that as well, which we think is important in the crypto space. There have been some bad actors, and so we have been absolutely focused at making this a very standard, straightforward, respectable investment.
I see. So can you give me an idea of what the minimum investment would be to participate in Bladetec?
Right. The minimum investment is £5,000. We're looking to raise between £3 and £10 million. At £3 million, that's the minimum raise for the company is go forward, and we're looking to raise up to $10 million. The larger the raise, the better the return, because the administration fees, which are not massive, but they are there. Those become smaller and smaller percentage-wise. So a larger mine has a better return. The point about Bitcoin mining is that you can't really do it in your basement anymore. It's not a hobbyist activity, and you need to have specialist expertise in terms of data center design, and that's what we have, that expertise to be able to design and run an incredibly efficient, large-scale data center, which will be a Bitcoin mine. This mine will have thousands and thousands of miners in it. So the minimum investment coming in at £5,000, that's very little of that is going to administration. All it's a better investment than going off and buying a coin itself, or trying to buy a miner.
Why is that? Is that because it's just less volatile, less risky, or why is it a better investment?
It's a better investment because you're buying the means of production as well as the output. So the mine itself will be generating Bitcoins. The way that a mine works is that there is a contest every 10 minutes, and the winner of that contest receives today 12.5 Bitcoins and authors the next block in the blockchain. That block in the blockchain has transactions. The transactions have transaction fees, and it's that miner that wins all of those. So we'll be participating in that, just like any mine would. Now, because we're producing Bitcoins, we're producing more Bitcoins than what you could buy with your money today. If you bought a Bitcoin today, it would stay. The value would increase and decrease, but the amount of Bitcoin you would have would be the same. We're generating Bitcoins, and so the idea of buying into a mine is that the mine provides a cushion for the investment. So if we've run some different scenarios. So let's say Bitcoin were to go up in the next 2 years, 50% to its present day value. Think of Bitcoin, the value today is around $9,500 to the Bitcoin. So if Bitcoin were to go up to, say, $14,000, $15,000 in 24 months, we would be returning a 57% IRR. That's annualized. So the idea is that you would make more money buying a Bitcoin mine than just buying Bitcoin. So your investment would appreciate better. Equally, if Bitcoin were to go down by 40% over that same period, over the next 24 months, you'd still have a positive return by buying the mine. So it is a safer investment than buying the cryptocurrency itself, and it's a better investment than buying the cryptocurrency.
Right. Can you tell us a little bit about the technology that the mine will be using?
Sure. There are Bitcoin mining started on a normal computer, a CPU, central processing unit. Later, some ingenuity went in, and the algorithm, which is called the SHA-256 or SHA-256 algorithm, moved into GPU or graphics processing unit circa 2013. We built, the reason this is called the third Bladetec Bitcoin mine is we built two before. So we built a CPU-based mine back in 2010, and then we built a GPU-based mine in 2013. And today, the technology is it's been boiled down and pressed into silicon. It's in a chip. These are called application-specific integrated circuits, and these chips are put together, 100, 200, 500 are put together into a miner. Miners vary in size, and there are fewer mining rigs for Bitcoin on the market. There are about 3 really today. So 2 are about the size of a pardon me, about the size of a shoebox, and these are ASIC based mining computers that run the SHA 256 algorithm incredibly fast. So, for instance, one miner today is equal to 12,000 CPU-based miners of 2010. And that one miner is taking about 1,200 watts or so. So it's incredibly power efficient. And a lot of the technology going into miners now is in the power efficiency. But it's interesting to note that there used to be about 50 mining rig companies on the market. Today, there are really about 3. There are a few others that are out there, but in terms of mainstay folks, there are about 3 that exist. So our technology will be based on one of those 3 miners, and in actual fact, we'll probably have a hybrid of those, and that's the idea. That we're running those mining rigs to generate Bitcoin.
Okay. So can I ask, you mentioned these previous 2 mines. Did they have similar plans? Were they operated kind of in the same model that this third Bladetec mining company is being operated?
Well, no, it was early days in terms of Bitcoin, and it was curiosity and an intellectual effort.
Okay.
The third Bladetec Bitcoin mine limited is being created by Bladetec Limited. That's why Bladetec is in the name. Mm-hmm. So the idea is Bladetec is a company that I created with John Pitcher in 2002, and this company existed for taking disruptive technology and applying it into financial services, but equally government and military, as well as general commercial. Some of the large-scale customers that we had in terms of finance would have been a trading floor for Alpha Tame, a bank in Egypt and in Dubai, as well as Charles Stanley in London, the trading floor there, Bank of Montreal, Toronto Dominion, and many others. Mm-hmm. We also have a business in government and military, and that was around the Ministry of Defense. I designed the top secret and above computing infrastructure for the headquarters at the Ministry of Defense in the United Kingdom, and quite literally wrote the book on data center design for NATO, which was then used has been used for a number of centers throughout Europe. Worked with the United Nations, the logistical base in Brindisi, and many others. The point is that Bladetec Limited has designed data centers on a massive scale, mm-hmm. and has been doing this for 17 years. So that's the expertise that's being given to the mine, and I suppose the key to this is that the mine itself doesn't have to pay for that expertise in a large way, and that's quite important. I've sort of lost track of your question, though.
No,
Right.
You answered it. I was wondering if the same business plan was used on the last 2 previous mines. But
oh, right, yeah. Sorry, yeah.
No.
So what I was going to mention was that Bladetec, as its normal day-to-day life, we design bespoke systems for, like I mentioned before, government, military, finance. And as such, we would be doing training, but we would also have a lot of equipment that was used to replicate an error if that were to happen. Okay. And so we had all of these idle machines. So, you'd work for a long-term contract with military, 6 months or so, and then the training. And then on the back end of that, you've got all these blades that are sitting around not really doing much at all. Mm-hmm. So it was just an intellectual curiosity. What is Bitcoin about? Let's build a mine. And so we did. So it was Bladetec had some idle machines around, and I knocked them up into a mine.
Uh-huh.
And said, that's interesting. It wasn't worth anything. Bitcoin was maybe at 1p per Bitcoin at that point in time.
Mm-hmm.
So we didn't make lots and lots of money, but we made a fair bit of Bitcoin. And then later we did the same thing around GPU. So we're calling this the third Bladetec Bitcoin mine because it's the third one that I'm making. And Bladetec is behind it. But this is the first one which is offered to qualified investors.
Gotcha. Okay. So can you tell me a little bit about the security that the mine is using in terms of how the Bitcoins that are mined will be stored?
Sure. It's very important security. And our mine will be very secure indeed. The most mining today is done in a pool. So we'll have miners and we'll participate in a pool. So this is kind of, you've got 5 miners and I've got 5 miners, and we make a pact and say, if you find the Bitcoin, if you find the nonce, if you win the contest, then we'll split it equally. Because I'm putting in the same effort as you. And if I find it, then I'll split it with you. So that's what a pool does. And so it's all measured in terms of the amount of processing power going into the share. Now, we will participate in a number of mining pools. One of the largest will be Slush Pool, which is the largest and longest running mining pool in the world, and it's not been hacked. Some of the others have, and that's why we're going to be careful about it and have some other backups there as well. But the basic idea is that mining pool is producing a predictable and even flow of Bitcoin to us. If I set up a single miner, and say, go mine Bitcoin, it might take 20 years for that miner to win. But if I am participating in a pool, and the size of our mine will be very significant in the likes of Slush Pool, it'll be a top 20 mine in the world, that mining power will produce Bitcoins every 10 minutes. Not sure exactly how much, but it's a fair bit. Every 10 minutes, there'll be a transfer made to our wallet. So it's not being held by the mining pool. The Bitcoins will not be on an exchange. They won't be on an online wallet or on a computer or device connected to the internet. The Bitcoins themselves will be held in offline wallets, and those offline wallets will be held in safe deposit boxes in London. So there's no online presence to our Bitcoins, so they can't be hacked, if you will, through that. So it's an important part of designing the mine, but it's more about process than the technology for mining itself.
Right. So the mine is going to be in London then?
We'll have a footprint in London. We're going to have multiple sites. So the key factor for a mine is the electricity and the amount of electricity, and so it is easier to build the mine in multiple sites. You can go to a commercial unit that'll have X megawatt or 1 megawatt or so of electricity coming into it, and then you can build the part of the mine there, go somewhere else. You don't have to lay big copper cable in the ground and transformers, which we've looked at it, and it's upwards of between $200,000 and $500,000 just to do that. So the idea is to have this in many places. We have sites already earmarked in Surrey, Suffolk, and one in London as well. So any shareholder will be able to come and see their mine working. If they're in and around London, then they probably go to the London-based facility and be able to see their mine at work.
Cool. So I'm curious, why the UK? We hear so much about Quebec and Iceland and China and different places around the world that have really inexpensive electricity. What was the attraction behind establishing this mining farm in the UK?
Well, it's back to that we're trying to bring crypto into the light. the respectability. The three directors, John, Declan, and myself. We've been around for a long time, so we're 50 something. We've built companies before, successful companies, and straightforward, authentic companies. And so that's what our background is. That's what we are. And so we wanted to make sure that this company was the same. I mean, and having it be in another country, some place where like Kazakhstan or whatnot, is maybe something which is 1 degree outside of somebody's comfort factor.
Mm-hmm.
And so the idea is it is a UK British company. It is the largest British mine. It is built, designed, and operating in Britain. It's as simple as that. Now, what made it happen, though, is Declan Kennedy is the director of biotricity. He's built 2 power plants, so he's well connected in the power industry, and we're getting some incredible rates in terms of electricity, and that is what makes it a good investment as well. I mean, it's all fine and good to say, let's build it in the UK, but if you can't be profitable to the same degree as and Iceland or what have you, then that just doesn't make sense. So we're making it make sense financially, but also physically. And so it's a real mine. You can come and visit it. So if it's up in Iceland, you're going to go and visit your mine. Is it really there? Is this a pyramid scheme? Is it a Ponzi scheme? Is it an ICO? Is it on any of these crazy ideas? Now, this is a standard UK company. Buy your shares of sterling, get paid out in sterling, come on down the road and visit your mine, have a cup of coffee, and learn more about it. You meet the directors. You can know everybody within the company. There'll be about 6 or 8 employees as well. We're very open, whereas a lot of mining has been secretive and closed, and investments into the area can be dubious. I mean, we are, because we're raising the funds through Investory, it's FCA. We've gone to CMS, which is a top 5 legal and tax firm in the world, to develop all of the legals behind the company, the shareholders agreement and all of that. But additionally, we went and had CMS do full due diligence on our investment note. So it's gone, and everything has been independently verified. So it was just this idea of demystifying crypto, demystifying Bitcoin, and just making it very straightforward. UK company in the UK. Simple as that.
Got it. So can I ask then, you mentioned briefly that you've got some connections within the power industry. Is the power that's being used to power this mine coal-based, or is it wind-based? And is Bladetec doing anything to combat the environmental costs of running a mining farm?
Yeah, the largest share of the electricity being used is coming from wind generation, wind farms.
Awesome.
And the thing about wind farms is that they get built, and they've been around for a while. And so these wind farms have they pay for themselves. And the way the wind farm works in terms of how it is set up financially and what it does and all, eventually they kind of gone through that life, and they become what is called out of support. Now, it doesn't mean that they don't work anymore, or that they're not quality or anything like that. It's just a term within the space that indicates that basically these wind farms are 100% cash coming in. So anything you pay, it just goes straight to the bottom line. And so we're looking at and have agreement with wind farms are out of support, and that means that we're able to forward pay for the electricity and receive that electricity at an incredibly good cost. And that's what makes everything work. That rolls right up into the finances, the returns, and all of that. So yes, green, but there will be other sources that will be used as well. So from normal, plugged into the to the national grid. Which, by the way, we designed a control room for the national grid.
Oh, okay, cool.
Yeah. In a previous life, Bladetec did. Yeah.
All
So
right.
we're connected in there some way. So yeah, green for the most part, and that sort of gives you an idea of why we're getting such a good rate on that green side.
Okay, gotcha. So after these 2 years are up and Bladetec is, the mine is sold and everything, do you have any ideas or plans about, what's next for Bladetec Limited? Like, will there be another project, or is it too soon to know?
Well, the clue's in the name. It's the third, so we're looking to create the fourth and the fifth and the sixth. Declan Kennedy, I mentioned about the Irish forestry funds.
Mm-hmm.
He set up about 25 of those, and so he set up about 35 funds over the years. Got over 500 million euros in funds under management. So we're trying to do the same thing. So we want to create a brand around crypto mining. Mm-hmm. And if you're going to do that, the best place to start is with Bitcoin, which is the original cryptocurrency, the most well-known cryptocurrency. And so, yeah, and we also want to make this very straightforward investment. So, yeah, it's just as Bitcoin. Now, there are other things that can be done. You can have a GPU-based mine, which may be mining Ethereum or any one of these other cryptocurrencies. You can have a mine based on GPUs, which will context switch, which will go from one cryptocurrency, mine that for 1 hour, and then change to another. And it can be a complicated thing. Yeah. So the mine could mine 100 different cryptocurrencies. The success of the mine is down to where is it pointing its resources, its computing cycles, vis-a-vis not only the crypto that's there, but also the value of that crypto. And so, yeah, that's a more complicated thing, and it's a different idea. And we'll get there. Where that's going to be understood by the retail market at large. But so the idea is, here we are with the third, and then we'll roll out the fourth and the fifth and the sixth. And the fourth could be the same as this. The fifth could be the same as this. Maybe by the time we get to the sixth, we're doing these other cryptocurrencies. We would like to build a brand around cryptocurrency mining.
Mm-hmm. I see.
And what we're thinking of is the full arc of the idea is that if you are creating that cryptocurrency, then the next logical step is to be lending that cryptocurrency and being a cryptocurrency bank. So
okay.
Over time, that's sort of the direction of travel of Bladetec is to have deep roots within the understanding of cryptocurrency and how it is created and stored and dealt with, and then move that into banking infrastructure. So the idea is that hopefully that we are authentic companies and respectable companies, and that branding can move forward into a bank.
Mm-hmm. So on a more general level, as this mine continues its 2-year journey, how do you see the role of Bitcoin changing in the rest of the world, and how will that affect the value of Bitcoin?
Well, there's a lot of ways to answer that. Mm-hmm. So the Bitcoin go back to the beginning. Bitcoin was created in this perfect storm of cypherpunks, quantitative easing, the world's economy changing and going down, and that kind of, and having the maths done by this mysterious person or group, Satoshi Nakamoto, that paper solved two key mathematical problems. And the cypherpunks got involved to how does that math work? How can we code that? And all. And that's where Bitcoin came out of, right? Mm-hmm. Now, where is it today? Today, it's becoming an established store of value, and you can. There's no central point of control behind this. There's no government control. It's developed by the network. Now, what Bitcoin becomes will be based on the users that create it, and partly it'll be because of us as well. Miners are quite involved in where Bitcoin goes. So, my personal view is that Bitcoin is, because of its market share, the market capitalization is the largest market cap of any cryptocurrency, that it becomes the gold standard for cryptocurrencies, and it becomes that store of wealth. It may not be the one that you use to transact, to buy a cup of tea or a pint down in the pub. It will be where that's where you store your savings, as it were. Mm-hmm. Now, you may then transfer that out and use another alternative cryptocurrency for your day-to-day transactions. But that's the Bitcoin. It becomes your bank account. Now, the direction of travel for money and the world is that it goes crypto. And I think that if you look at things going on in Argentina in terms of the interest rates, in terms of where we are in our economy, in the world. So we're not where Argentina is now, but at some point there'll be a downturn. That's just how things go. Mm-hmm. And how to get out of that when you have a government-backed fiat currency, well, you go and you print more.
Right.
And that's the quantitative easing, right? Within the maths, within how Bitcoin works, you can only create 12.5 Bitcoins every 10 minutes. You can't make any more and you can't make any less. That's how it works. Mm-hmm. And in another 2 and a bit years, that 12.5 becomes 6.25. And 3 years after that, it becomes 3 and 8. This is the monetary policy behind Bitcoin. Mm-hmm. Now, that's in the math. That cannot be changed. So when we hit the next time when we start printing loads of dollars or euros or pounds, mm-hmm. then the market's going to be looking at something like Bitcoin that has a very strict monetary policy and saying, that is a better store of value than my government-backed currency. So there are inflection points in terms of the value of Bitcoin. They happen in those halving events, but they also happen vis-a-vis government-backed fiat currencies, and just with a stroke of a pen, there's another 500 billion of them created overnight. And so where's that store of value and all? So I think that folks will look at, so it depends on politics and the world economy going forward. But it's not far from saying that Bitcoin can be a safer investment, a safer store of value than the currency of your country. Once that starts happening, then I think the train's left the station. In fairness, I think it's already left the station.
Can you talk a little bit about second layer solutions for Bitcoin, like the Lightning Network, and will that affect mining profitability?
Yes. So second layer solutions, I think of it in two ways. Yes, you've got your Lightning Network there, but it's also what do we build on top of Bitcoin itself. There's some folks that think that Bitcoin becomes an infrastructure, and that there'll be sort of a Bitcoin 2.0, if you will, sort of that the progression is that Bitcoin becomes an infrastructure play. Mm-hmm. That's quite interesting. But I think that's outside the realm of this discussion. There are issues in terms of transaction speeds, rates, and all that the Bitcoin blockchain has, and Lightning coming out there, that's got that has some some merit for it. But there's a lot of other ideas as well that are going on. So the blockchain, as the Bitcoin blockchain is today, is just a sort of a straightforward, like a train line, right? Mm-hmm. Just add another cart on the train line. There's a lot of work being done to segment, to create, make the blockchain into a tree, which can aid in transaction rates and all of that. These are more esoteric, technical problems, but I suppose they're important vis-a-vis the adoption of and suitability mm-hmm. of the cryptocurrency to becoming a day-to-day transaction. Yes. So yes, there are things that need to be changed, and as ever, there's no central backing, no central point of governance for it, and it's being worked out by the community.
Right.
Which is very interesting.
Yeah. So implementation of something like the Lightning Network wouldn't really affect mining profitability very much.
Well, we don't think so now. I mean, look, the lifetime of the company is 2 years, right? So mm-hmm. We're not going to. I don't think we're going to fix that bit in 2 years. In 2 years, what I'm seeing as the biggest change is going to be more regulation, which we're all for more regulation mm-hmm. in terms of KYC, AML checks for investors and exchanges and all of that. Again, bringing crypto into the light. And that I think is going to be the fastest change that is a positive thing for Bitcoin. Mm-hmm. But in terms of the mining, we're mining during this halving, probably up until the next halving event. We will have a fixed cost on a monthly basis, and we'll have a variable production on mm-hmm. a monthly basis, and that goes down, right? So, what we mine in month 1 is much more than what we mine in month 14.
Right.
Because that's the way that mining works, right? So we have a declining production, but in fairness, what is the value of a Bitcoin in month 13 vis-a-vis month 1? And so we're looking at this, we will be looking at it each month and saying, right, what do we make and what do we pay? Right? Our costs are fixed. And so there will be a point where those two curves, your cost versus production, will intersect. Mm-hmm. And that's our indicator that we need to start to sell. Okay. And that's when we start to liquidate the assets, stop paying electricity because we're turning things off, and save money. So our horizon is only 2 years, really. And I think that's important that we're just seeing that far. If you're looking at it 10 years from now, well, that's more of a relevant question that you have. So I think it's we think that the playing field and the pieces on the playing field will pretty much be in the same place in 2 years' time. They'll just be in a better way and more believable and respectable and all of that. So it's going to take longer for Lightning and whatnot to take hold and to make an effect on mining. On the third Bladetec mining, I don't think it'll have a huge effect.